Okay, so hi, I'm back again, and in this video, we'll do chapters 3 and 4. And chapter 3 is with regard to organizing and financing, which is the big topic in this class, a new venture. All right, and there was a lot. This was like a big chapter. We talked about different forms of business, right? Proprietorships, corporations, partnerships, LLCs, and you should make a list of what each one is, right? And we talked about patents and trade secrets. Those are important concepts, as well as the types of business. So basically, we had a sole proprietorship, right? A partnership, a corporation, which could be C or S, and we had limited liability companies, right, which, as I said, are easy to form. And you'll pick one when you do your business plan, right? And basically, a proprietorship has unlimited liability. You should just know that, right? You're liable for everything. Your personal liability, you're obligated on everything. And there's two types of partners, right? In a partnership, general and limited. The general takes on all the risk, and the limited is only liable to the amount of money he invests in it. So a limited partnership, basically, are limited to the liabilities of the amount of their equity capital contributed to the partnership. Have a sip of coffee there. All right, and a corporation is a legal entity, and you are the owners if you're a shareholder, and the shareholders have only liability up to the amount they invested. So you're never liable, and there's a charter for that. And an S corporation, basically, I believe, has a limit of 100 shareholders. I think there could be 100 shareholders. And somewhere in the book, I think it basically says that. So please make a note of how many shareholders there are in a limited liability corporation. And right, so there's basically, you don't have to know too much on this as far as the number of owners. The limited liability, you should know here. I'm sorry, subchapter S Corp. Is less than 100 owners. That's what I meant, not limited liability, right? It says less than 100, but I believe the number is 100. And if you don't mind, I think there's in the book, it is a discrepancy, and I'm going to look at that right now. Okay, so figure 3.2 on page 94 in your book has S subchapter S corporation, 100 or fewer owners. So the 100 is probably a good number. Okay, so I just wanted to make a point of that. All right, so liabilities, the proprietorship is unlimited, and limited partners and limited only to their investments, as we talked about. And basically, subchapter S is limited to shareholders' investments. So a limited partnership, as we said, has general and limited partners. All right, so there's things here about the life. You don't have to know too much about that. Corporation has unlimited life. They all have unlimited life. And most of these are taxed at a personal level. And you'll see personal, and the dividends on a corporation are subject to personal tax rates. And there's a double taxation penalty. Remember that? All right, so what we should know here is the There's 4 forms of protecting intangible assets. And the 4 of them are a patent, a trade secret, a trademark, and a copyright. And a patent is intellectual property rights granted for inventions that are useful, novel, and these are important words. You should know these words: useful, novel, and non-obvious. All right. A trade secrets, intellectual property rights in the form of inventions and information not generally known to others that convey economic advantage to the holders. Trademark is an intellectual property right that allows you to differentiate their products and services through the use of unique marks, and copyright is printed and electronic material. And the important words for patents are useful, novel, and non-obvious, right? Patents are granted by the Patent Office, and we don't have to worry about it. The lawyer, right? There's 4 kinds of patents: utility, design, plant, and business method. So bear in mind, please, that there's a business method patent. So 1, 2, UDPB, right? Protects specific ways of doing business and the underlying computer codes and technology. So there's 4 kinds of patents, one of them being a business method. Okay, so this is an important line, and good, true, and false, right? A new idea by itself cannot be patented. So if someone takes the not off, a new idea by itself can be patented is false, right? This is true. The idea must be part of an invention that has a physical form, okay? So that's an important concept. Okay, so utility patents develop or conceive an invention, and the patent will be for 20 years. Prior to 1995, it was 17, but the life is 20 years. And the word patent pending was for a provisional application. Now, you don't need to know too many details about this. So a provisional patent will live for 12 months, 12 months, as opposed to the 20 years we talked about here for the regular patent. And there's reasons why it'll be rejected, right? It may not be correct, useful, maybe it does nothing. And basically, the government does not enforce the patent rights. So that's a good, true, and false, right? The government does not enforce your patent rights. So the burden of enforcing the patent lies with the inventor. All right, so then there's trade secrets like Coca-Cola we talked about, formulas, right? Trademarks are like a swoosh on a Nike, right? They're marks. And basically, then there's copyrights, right? Protects the expression of an idea and not just words themselves. And it's for books and electronic media, as we know, with the C, the copyright symbol. And there's non-disclosure agreements and employee contracts. And that's about it for chapter that. So the important thing is to distinguish the difference between the 4 methods here of protection: the trademark, copyright, a patent, and the other patents, trade secrets, right? Trademarks and copyrights. So this is the important thing in this chapter, and the different forms of business, which is, just know the general items with that. 100 for an S corporation, 100 shareholders, that type of stuff. All right, so let me bring up chapter 4 here. We'll bring up chapter 4. All right, so now we embark on financial statements, right? So we're going to look at financial statements, and everyone should know that GAAP, GAAP stands for General Accepted Accounting Principles, okay? And depreciation is a reduction in value of assets over time. And a balance sheet has two sides. I think a lot of you know this, right? You should have no trouble with that. Short-term current assets are on the top, right? All right, and the cash and receivables and inventories are short-term assets. You should all know that. Liabilities of accounts payable, accrued wages, bank loans, right? And I think you know all that, right? Long-term debt follows the short-term current liabilities. And basically, next is the income statement. Revenues is on top, otherwise known as sales. Gross earnings is net sales after deducting returns and allowances minus the cost of production, otherwise known as gross profit, right? Gross profit margin we talked about. Net income is the very bottom line, right? Remember, net income, the very bottom line on the financial statement. Operating income, another name for it is EBIT. That's an important thing to remember, right? Operating income, or earnings before interest and taxes, is that's the same thing, right? All right, so there's different schedules. You don't have to know really too much about these, right? And then there's a statement of cash flows, right? It shows you there's 3 sections on that, right? All right, so net cash burn occurs when the sum of cash flows and from operations and investing is negative. That means you're spending more than you have. All right, so there's also, when you do a break even, there's variable and fixed expenses. Right, so there's a couple terms here, and I'm not going to test you too much on these, right? They're just a lot of acronyms. What you should know here, though, is the cash flow break even is when EBITDA equals 0. That's all, right? Break even is for cash flow is EBITDA equals 0, right? And here's the basic equation for EBITDA. Remember, this equation is important, so let me highlight that here. Let's highlight this. Come on. All right. And when EBITDA is 0, right? VC revenues equal variable cost plus cash fixed costs. Set this to 0 and you get this right here. All right? So we'll highlight that. That's important. So let's highlight that. And all right, so then now we hit some equations, and there's a lot of equations that take us to the survival revenue, and you can see we drill down on this one equation. So ratio of variable cost to revenue is a constant, and it's called VC over R, and the name of that is the variable cost revenue ratio. It's variable cost over revenue, and the survival revenue is VC, right? Which is this ratio. Plus cash fixed costs, and we keep drilling down, and we have here that Survival revenue is equal to cash fixed costs over 1 divided by 1 minus variable cost revenue ratio. So I'll highlight this as this is important, but it's written down in a couple different ways. So you should have them all on your sheet, right? So you should know that. And here's an example of that. We go to an example, and you can see we solve for the survival revenue here. And you can see the survival revenue is just enough where we break even, right? EBITDA is 0. This is used to get you to the break-even point. All right, and as just to show this graphically, there's your break-even point, revenues and costs, and right there's where you break even. And they show it for different revenues. And they give you a couple of examples here of different variable ratios. But that's pretty much it. So you don't have to know anything with regards to economic value added. And basically that's pretty much about it. So what's important in this in here is the types of statements, right, and where things go, and also the big thing is this equation here, these equations here. So slide 18 and slide through slide 20, 21 maybe, with these examples are important. Alrighty, so I'll do 5 tomorrow probably. So keep going over these, and you can go over them online anytime, as many times as you want. And if you have any questions,